If I can move now to Admassu, if you can share with us your views on the infrastructure investment climate in Africa from PTA's point of view, just very quickly.
I think one way to look at this question of the investment climate is to stand back and just look at the overall reforms that have taken place in the continent. I think we've seen a journey of about 20 years go on, and we've seen the outcome of those reforms in terms of stability at the macro level. There's a huge change in the past 20 years, and we've even seen that move into the meso space. I mean, when we talk about the infrastructure-specific investment climate, all you have to do is look at telecoms to see what's been achieved. We're not talking, it's not a pipe dream, it's real, it's happened. Now I think the question is, how does one unlock the power space, which is really the very exciting sector everybody's expecting big change in. And we've seen that sector also go through quite a bit of liberalization. We've seen several countries unbundle. We've seen a lot of PPPs come into fruition. Of course, the difficulty is there. It's not easy sailing. It's not like the telecom sector, because those are standalone merchant operations where there's little interface with state, apart from the licensing. So there are specificities to the network infrastructure. I think the whole question of creditworthiness, of sponsors, of utilities, the whole issue of PPPs. Now you're really talking about reforms at the micro level. So we've seen very profound success at the macro level, including even the political level. If you look at the issue of conflict and contestation, what we were seeing in the 80s versus what we see these days. So the macro space has really come a long way. It's not perfect, but I think the real issue now is how do we get the micro environment to work? Because it's really more at the level of regulation, the legal framework, not just what's on paper, but also the practice, the people who are expected to implement those frameworks and conduct the processes that need to be managed. And I think that's where you see a lot of ongoing challenges. I think the world as a whole has put the spotlight on micro reforms. We see the tracking and the reporting going on regularly in terms of the environment of doing business. Many African countries have captivated the imagination of the world by being in the top 10 of reformers worldwide in terms of little things, administrative efficiencies, getting the red tape out, getting the bureaucracy to work better. So I think when you look at those aspects, you begin to get confidence that the investment climate actually is really changing. The problem, of course, is when you're in it, you don't have the patience, you don't want to look back too much. You want to look at the possibility and the potential to convert deals that are on your table at that point in time. And we all get frustrated. We have deals that we all have on our books. We all have risks that we need to manage, and that's where the impatience comes in. I think the next round of reforms are not, it seems it's easier to do it at the micro level compared to the macro, but the reality is probably not as it would appear, because dealing with human capital issues, which is a key part of it really, getting the institutions to work. It's not a question of political will anymore. Actually, it's about capabilities. Even the corporate sector, companies have challenges getting capabilities aligned and in place. So there's a lot more going on in the micro space than I think we've all appreciated would be as difficult. I think it's just a whole lot more harder. I think DFIs, of course, have a role to play. There have been a lot of facilities to support the upstream aspect of project development. But I think those are very good at the project level, but we still have a lot of problems in terms of interface with utilities. You know, in the end, even if it's a PPP, there's always the payments that have to come through from the sponsor. And so you have, whether it's a currency issue or whether it's a question of timely payments. Of course, there can be credit enhancement, but that piles onto the costs, and that also creates additional constraints. So I think that's the perspective on investment climate. I think in terms of platforms and strategies, I think what's very interesting is, first of all, we've seen private equity come in a big way. 10 years ago, you can count under one hand, under maybe 2, 3 private equity firms. Today, you're looking at 10, 15 private equity funds dealing specifically with infrastructure. Not everybody has the best things to say all the time, but you see there's activity and there's movement.
Private.
I think the very recent developments are also quite interesting, where you see multilaterals now going into that space to actually support the traction on the ground. You see the Africa 50 Fund, which is still very young. We are raising the Comesa Infrastructure Fund. Of course, the DFIs have supported the mainstream private equity funds by taking a stake in them and doing partnerships. But now you see even special purpose infrastructure funds being created within multilateral frameworks. Now that introduces a whole new space and opportunity, I think, for pension funds and others who can't seem to get over the hurdle of coming into a sub-investment grade marketplace. And so you now have inbuilt credit enhancement that comes through by having multilaterals literally owning the funds. And by a multilateral owning a fund, that means you have recourse to callable capital to the extent that the fund has that link. I mean, we've actually demonstrated that ourselves as PTA Bank by literally offering our own shares, not a special purpose fund, but actually offering the shares of the bank itself as a proxy for the infrastructure asset class. And because we're commercially orientated, we don't do concessional financing. It made sense. And we launched this new class of shares in 2013. We had intended to raise about $100 million over 5 years. We raised it in about 2.5 years. And we've been paying dividends on that. And it's actually interesting because you can actually give diversification benefits as well. You can offer geographic diversity. You can also offer some element of sectoral diversity. You can even offer instrument diversity in the sense that there's a blend of not just equity, but you have mezzanine, you can even have senior debt. So you have a whole lot of blending going on in a very unusual way. And we found quite a few pension funds have found that quite attractive. And attractive because also you're able to give that annuity income. So, you know, you get capital appreciation on the shares themselves, but then on top of that, you get the annual yield, which we've been delivering about close to 4% yield in 2014 and in 2015. That's over and above the capital appreciation of 10, 11%. So an overall ROE of 14, 15%, where a good third of it comes as a yield. The remaining 2/3 is capital appreciation. That has actually got us quite a bit of traction. In fact, that story has been a lot easier for us than raising some of the funds, because the whole, waiting 10, 12 years, and that's got its own set of risk digestion that needs to happen at the level. I think I'll stop here, in the Q&A we can add more.
Thanks very much, Admassu. I think there will definitely be questions about your fund coming up in the Q&A session.
Doing business in Africa. You can't afford to be without Africa Investor.